Hello again, David Chomet here with Chomet Solutions, and I've recorded a series of videos now talking about different entity choice. Today's video is going to be all about why sole proprietorships might be for you and they might not be. So let's get into the video now. So sole proprietorships, that's really, you're going to find that that's the easiest form of business. It takes little more than just saying, you know what, I'm in business today. I'm going to go out and do this. You don't need to file any additional paperwork. You don't need to do much of anything else to really get started. And that's a good thing for those of us who are operating on a severely limited budget. And in fact, even the $500, $600, $700 it would cost you to form a corporation is just too much. This may be an alternative. You don't need to, if you don't have a need for a brick and mortar location, you're maybe operating out of your house or out of your kitchen as you're getting started, a professional services firm, something along those lines. All of those things are well suited for sole proprietorships, particularly as you're getting started. You know, and part of the other benefits is that your taxes are really kind of simple as things go because everything is a pass through. The checks can be written to you personally. You can be written. You can use your own bank accounts, although I would suggest setting up separate bank accounts just to keep everything separate. But you don't have to, particularly at the beginning. Now, the challenge with that is if you don't set up separate things, then things are gonna get muddled. If you have just one bank account, you're gonna find that money's coming and going, and things will be very, very difficult come tax time because you still need to sort your expenses and your income as you go. But you don't have to do that from the start. And that separation, or rather that lack of separation, really is related to this idea of there being no real liability protection. In other words, if your business goes out and hurts someone, they can sue you personally. Depending on what state you're in, they can take your personal assets to a certain extent. With corporations, as we've already discussed with the C Corp, and we're going to discuss with the other forms that we're entity forms as we go forward, that's not as likely. It's a lot harder to do. Not impossible, just a lot harder to do. A sole proprietorship offers no real protection. But, like I said, there are also no extra filing requirements or reporting requirements. So it's a lot easier to just get into business quickly. Now, one of the things that I suggest that you do is to be in a situation where you set up a DBA. What I've done is this is a screenshot of going to the assumed name or doing business as DBA database for Harris County, Texas, which is Houston, which is where I live. And you can go there and you can do a search. I did a search for Jefferson. You can see all the different people who have filed a DBA to work as something related to Jefferson, Jefferson Apartments, Jefferson Associates. What's interesting about a DBA is that you can form a corporation and file a DBA for that corporation. We can talk about that more in a later video, but the idea for a sole proprietorship is if you're David Chomet, you don't have to do business as, hi, I'm David Chomet of David Chomet. You can form a DBA, you can call your business anything that you want. The cost generally for filing a DBA is very inexpensive. Usually, I think 10, 20 bucks. The challenge, though, is that often it is done on a county-by-county basis. The challenge with that is that it makes it hard to find when people go looking for you. So people may not believe that the business actually exists if they go searching. Every state where there is a corporation, where you form corporations, has some semblance of a database. They may not, the information that they have available to the public may be different from state to state, but those databases exist. So you're going to be able to go out and find a company, if you know what state it's incorporated in, you know where the Secretary of State for that state's website is. With DBAs, you have to go county by county, and it's a whole lot harder to do. And you may have to take a couple of extra steps to prove to someone that they actually exist that you actually exist in order to go forward. And then that leads to, frankly, the last sort of thing that you need to know about sole proprietorships, and that is that it all ends with you. The business rises and falls with you. And when you pass away unexpectedly, the business ends as well. And that can lead to a lot of complications because remember, one of the things we like to talk about and think about is what is your exit strategy? How do you sell the assets? Well, you're selling assets of you. Okay, that doesn't exactly make sense. So you would be stuck selling the assets as opposed to selling the shares of a company. Is it an insurmountable problem? No. But you're much better off not having to worry about what your death is going to do to the business. We like to metaphorically think that when we die, the business, the world can't go on without us. But the truth is, it does go on without you. And so, as you're thinking of these businesses, if it's something that's not temporary, something that you want to be long term, a different corporate entity makes a whole lot more sense than the sole proprietorship. So that's just a very quick overview of what the sole proprietorship entity choice looks like. Keep in mind, every state's a little different. Every situation's a little different, so be sure to contact and consult your legal and tax professionals particularly before making any final decisions. If you've liked this video, by all means, comment below, like, subscribe. Please tell me what I've missed, and I look forward to hearing from you and seeing you in the next video. Thank you.